All right, let's get this started. Hey everyone, let me adjust my microphone. Just give me a moment here. It's Mark P. Markets, Mark Principato. Thanks for joining me for another Greenbridge market analysis. I'm not simulcasting today because I need to get that stuff ironed out. Otherwise, it takes me forever and all that stuff. So I'm not going to talk about all those technical details. Hey, if you're new to the channel, welcome. If you would like me to analyze a stock or an altcoin or whatever, please share the symbol in the chat now. And if it's an altcoin, please make sure to put USD or USDT after the symbol so that I get the symbol right. Okay. And once I get through my portion of the analysis, I will go through the chat and I will analyze your chart. Also, please, if you can, one chart per question so that it allows me to get through more questions. All right, so with that being said, let's get started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let me go here to the chart. Now, we have a lot to talk about today. We're going to be covering Bitcoin and, the usuals. And of course my rants and all that stuff, right? I mean, that's what everyone comes here for. I know. All right, so hope everyone had a nice couple of days off. Now, let's talk about the economic calendar very quickly because it's always an important thing to check. You should check your economic calendar, whatever platform you use. On Monday would be a good day to check it just to see what kind of scheduled economic news comes out for the week. This is especially important for Forex pairs. Okay, so we have tomorrow, starting tomorrow, Tuesday, we have for Europe ECB bank lending survey. That doesn't mean anything. We also have the Royal Bank of Australia trimmed mean CPI. Okay, a lot of unimportant reports here. Consumer price index for Australia. Those are not big market moving numbers in terms of like the US dollar or anything like that. So wouldn't worry about those numbers. On the 27th, which is Wednesday, I believe, right? For the U.S., we have non-defense capital goods orders, and we have durable goods orders. That could be slightly important. That usually comes out around what, 8:30 or 10 o'clock a.m. Eastern time. Could be important for setting the tone for the stock market that day, if there are any surprises. Otherwise, I wouldn't worry. It's usually not a big market moving number. Also on the 27th, we have Canada, Bank of Canada Monetary Policy Report. They have their rate statement, their interest rate decision, and their press conference. Could be important if you're in a Canadian pair, something crossed with the Canadian. Other than that, not a big market mover for the globe. We have also on the 27th, Bank of Japan, Monetary Policy Statement, their interest rate decision, and their press conference. Now, that's probably in the evening sometime, Eastern time. I don't have timestamps on this, so I'm guessing that could be between 8 and 10 p.m. Eastern time. Double check your calendar. Important, again, if you're in a yen cross or yen pair, but otherwise, usually not a big deal, okay? On the 28th, we have ECB interest rate decision and their rate announcement policy decision statement, blah, 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 okay? That could definitely move the euro. But besides the euro, I don't see, that's usually, again, not a big, I wouldn't expect much from the stock market, the U.S. stock market on that type of news. Unless, again, there's something dramatic, but usually there's not. Okay, also on the 28th, harmonized index for consumer prices. That's Germany, not worried about that. For the U.S., we have gross domestic product annualized. And then there's another ECB press conference on the schedule here. I don't know if that's the same one or just, a separate one. Then we have Australia, retail sales. That's all on the 28th. Okay, on the 29th, we have Germany, gross domestic product. We also have Europe, gross domestic product. We have consumer price index. It's all for the ECB or for the euro and all that stuff. Again, none of these are important. Okay, and then on the 30th, we have China, non-manufacturing PMI. So, what was missing from this calendar here? No FOMC meetings, no Chairman Powell testimonies, no NFPs, right? Those are the really big scheduled market moving events that I look for. And that only helps me to adjust for risk. That's it. I'm not sitting there looking for trades, all right, on that information. Now, another thing I have to point out is there are a lot of company reports that are generally coming out during this period. So if you're into particular stocks or you're interested in a particular stock, you should check out when they are reporting, because that can affect the stock significantly. All right, and if there's a big company, something like a Microsoft or whatever, and they come out with a bad report, that can affect the whole market, because that can affect the S&P and the Nasdaq and all that stuff, and that could set a bearish tone. So just something to keep in mind when it comes to adjusting for risk. All right, so that's the economic calendar. Let's talk about Bitcoin. And real quick, let me just say hi to a few people here that I see at the top of my chat. I see David. Hey, David from Spain. Thanks for stopping by. Elizabeth. I see Dan and Schwartz. Of course, we have Schwartz Bond from the Secret Service here. Okay, International Man of Mystery. Thanks for stopping by. Eligius. Sean. Hey, good to see you. Oh, it's nice to see you in here. Andre. Avi. Okay, cool. Travel. Alex. Hey, everyone. All the regulars here. Cool. All right, so let's talk about Bitcoin. Now, I wrote an article on TradingView yesterday, and I talked about in that article some possible buying scenarios. Now, here's the thing, and I see a couple of these questions at the top here, sort of asking about Bitcoin, right, from Elizabeth and from David. So I'm going to try to answer those questions while I analyze this thing here. So first of all, you could see this box that I have on the chart. That is resistance all the way back from the 64K area peak, right, from back in May or whatever, March, April, May. So I just basically, without polluting my chart, I just drew a box that represents the same area. Now, that means this has produced a higher low. You could see the bullish pin bar that was produced yesterday, right, and today's candle, which is right, just give me a second here. Since when do I have... All right, I should be back, I guess, to normal there. Okay. It's not receiving enough video to maintain smooth streaming. Okay. It looks like I'm back on here. All right, so hopefully that... I don't know what that's about. Sorry about that. Must be high demand on the bandwidth here today. I guess everyone's home. No one's working today. All right. So anyway, so let me continue here with Bitcoin. Right, so what I was getting at here is the probability of the location is not the same as your risk. People think it's the same thing. So the risk for this trade, someone had asked about this also earlier, I think it was Travel, asked about in the chat room, the risk for taking a trade or where to place that stop. Now, the stop is the numerical amount that defines your risk. But Bitcoin will tell me what the market risk is. All right, let me know if this sound... okay, hold on. All right, I think I should be good now. Just let me know if there's any complaints. Let me know if the sound is not good or something. I still see an error, but it looks like my stream is going through smoothly, so just some feedback would be cool. All right, I'm just going to continue as if everything is okay. So what I was saying here is the market will give me risk. The market will tell me what the risk is. And Bitcoin, for Bitcoin, that risk has been about 4,000 points. People look at me with this strange look when they 4,000 points. I'm not going to risk 4,000 points. Well, but that's what the market says the risk is. So at this location, if you bought this thing at 61.5, a reasonable place to put the stop would be about 4,000 points away. Okay. Now, if this thing fails, you can take the 4,000 point loss, or you can adjust sooner if you can clearly see the failure taking place and making that adjustment, right? And that's really what makes a good trader good, is their ability to adjust, not reading charts, okay? This is more about understanding when conflicting information comes in, understanding what the market should do versus what it should not do, and then making that adjustment when the market is not behaving as it should relative to what the structure implies, right? So in this case, the risk is about 4,000 points. Yes, this is a trade that you could say is in play. I wouldn't buy this now at this price because now the risk is a lot higher than 4,000 points. That 4,000 point risk was implied from the break of this candle, or when the buy signal went into effect, right? So let's talk about the probability of the location, something that you cannot see, something that is not obvious. This location here, let me emphasize it a little bit more here. This location is not a support in general. Okay, it's near a resistance. In fact, you could see price rejected that 67K area. That was a projected resistance that I had from, what, 9 months ago or whatever, a long time ago. I had that line on this chart. It rejected it, and it could possibly reject it again. It could fail somewhere in between. My point is, the probability in this area is not going to be as favorable as it was around 40K. Okay, or even 30K. Why? What's the difference? Well, 40K and 30K, right? Here's 30K over here. Those are support levels. Those are support levels, and they are consolidations off of support levels. So chances are, if it rallies off of such a support level, and if it breaks that consolidation, right, the chances are more favorable. They're more in your favor if you're long. So I can't assign exact numbers to these probabilities, but think of it this way. If you're coming off of a support, right, kind of like we were back here, off that 40K double bottom, right, pull back, double bottom, off of a support level. It's a higher low support. You could probably assign maybe a 60 or 70% chance of that thing being more in your favor. Why? The general trend is bullish on Bitcoin, the broader trend, and this minor trend, right, this corrective move was correcting a broader bullish movement. So everything lines up on the long side in that type of situation. So you can assign it a greater than 50% chance that this thing is going to go your way, okay? And that's still along with your 4,000 points of risk. But the probability of the location is much favorable, which means if you were thinking short, then the opposite would hold true, right? This would be a very bad area for shorts. Now, of course, we can say this after the fact, but what I'm trying to teach you here is that's a support. This up here is not a support. It's a resistance, and that hasn't changed. We have a minor support off of 60K. I talked about that in my TradingView article. That's minor. That's not the same as a large magnitude support. So what kind of probability can we assign here? Should we be assigning a 70% chance? No, it's a resistance. So maybe 50%, okay? Something that's, you flip a coin and hopefully it goes your way. That's the probability of the location. And you're dealing with 4,000 points of risk. So there's a greater chance that this thing can fail here. This thing could give you a failed high, a lower high, all kinds of things here, right? And that's the probability. So I don't like these locations. That's why I would consider this a somewhat aggressive trade. Now, there is an argument for the structure. This is not a bearish structure, it's bullish. And we have a higher low. Higher lows often lead to higher highs, okay? So you have that going with you. So how do you adjust for that? Well, since you have the structure going your way, maybe we can give it a greater number than 50%, but I wouldn't give it 70, maybe 60%, maybe 55%. Right? That's the way to look at it. Again, I can't give you a solid number that I used a calculator to get. I have to use anecdotal, evidence, or I have to use experience to basically sort of assign it some type of what are the chances it can do this, right? And if the market goes the wrong way, you have to be prepared to adjust. Now, so one thing I want to add to that is, what do? Do you have to wait for the perfect situation to get into these things? No. If you want to get in, and one thing that really helps with the fear of missing out is you just go smaller, right? So if you normally take, I don't know, let's say you normally buy a $1,000 position. I'm just going to throw a number out there. Instead of putting $1,000 of Bitcoin to work, perhaps you only put 500 to work, right? And I'm talking from a swing trade. I'm not talking from investing. So we're talking like, whatever, 500, maybe a little less. So if it goes your way, you still win. But I know what the complaint is. Oh, but I could have won more. How do I know so that I can put all the money I have in the trade? You don't know. So since it's a riskier location, you adjust and you go smaller. And if it goes your way, hey, you still get a little piece of it. It's better than nothing, right? You have to understand something. When it comes to markets and random environment, which people seem to still not embrace that idea, but markets are random. This is not like a linear job. When you work at a job, you're not happy with what you're getting paid, right? I'm not getting paid enough. I need to get paid more. You go to your manager and you say, I want a raise because I'm not getting paid enough money. And if the manager values you, maybe the manager will give you a raise. If they don't value you and they could replace you in 2 seconds, they'll say, hey, get out of here. Go somewhere else. Quit. I don't care. You're not getting a raise. That's linear. Now, the market, if you say, well, I'm not making enough money, some fake guru will say to you, well, just add more size. But probably not in that impression. But they'll just say, oh, you can easily scale by just putting on more. But the thing is, in markets, you can lose. Right? When you're at your linear job, the only thing you're losing really is you're exchanging your time for money. In the market, you're putting money at work to make more money, and you're risking that money along with your time. So now the money evaporates when you're wrong. So that's a very important thing. And you're doing this in an environment that's random or highly random. So you can't, that's why greed is such a bad thing in this game. You can't go into this, I didn't make enough money. I should have put on a larger position because I didn't make enough money and I was right. How do I know? You don't know. So you control that with a smaller size. Okay, so that's really the best way, I think, to deal with the fear of missing out. Just go smaller. If you're wrong and you see the problems developing, you bang it out, you take a small loss. Right? And that's the best way to do it. And again, I'm talking from the swing trade time frame. That mentality that I just described happens a lot faster on the day trade time frame. And one of the big obstacles with that is taking on too many trades, and then you have lots of small losses and they can add up, right? So over trading is a really bad thing on the smaller time frames. It's not as frequent, of course, on the swing trade time frame because you shouldn't have too many trades to begin with. It's a swing trade, and there are not that many opportunities. All right, so that's the Bitcoin situation. Higher low should lead to higher high, but there's a good chance that it can turn around here, or there's a greater chance than when we were at 40K. So you have to decide how you want to deal with something like that. I would consider this aggressive because of the location. You know what I would feel more comfortable with? And I know Andrew sent out a bunch of trades earlier today. What I'd be more comfortable with on something like this, because it is a buy signal, but I'd prefer an actual test of the support, maybe like a little mini double bottom, something where it gives me some sort of consolidation and then reverses, gives me like that failed low. I would like to see that up here. It's more conservative, yes, and I could be wrong, and this thing may just, put in a nice strong leg and I miss it, whatever. But, I don't care, right? Because I know that there are more opportunities. So anyway, so that's Bitcoin. Now I see a bunch of questions. David asks about, I'm going to answer this swing trade question, right? I'll get to SHIB after I do my part of the analysis. But he asks, can you explain the basics of swing trading? Since I'm talking about Bitcoin from a swing trade perspective, swing trade just means it's a time frame category, right? Swing trade means you're gonna be in a trade for maybe a couple of days to a couple of weeks. So you're looking for that type of magnitude, which implies a certain amount of risk and a certain magnitude of reward, right? That's from a swing trade. So you're typically going to find those opportunities on a daily time frame. You're not going to find them on a 30-minute time frame and all those smaller time frames. That's more appropriate for day trades. So that's really what differentiates a day trade from a swing trade from a position trade. And certain risk management techniques like using stop loss orders and targets and all that stuff with limit orders, all that stuff would be associated with a swing trade. That's really all it is. It's just a trade category that has its own magnitude of reward risk. So your expectations need to be adjusted for this time frame. And all the information that you use, especially from your chart, should be from the larger time frame. Getting caught up, let me check out this, this 1 hour chart, blah, blah, blah. You're just causing trouble for yourself and confusing yourself because you're looking at information that's not relevant when you do something like that, when you mix time frames. Okay, so that's what a swing trade is. Now, okay, so I just wanted to mention that real quick. Let's go into the Nasdaq, all right, and then I'll jump into gold. Now look at this. That's a nice looking chart. Oh, wait, hold on. Before I do that, let me just do this real quick. Bitcoin on the weekly, right? And I pointed this out too in my TradingView article. Here's the thing. So The previous weekly candle, you could see it there. It's a bearish pin bar, right? New candle is just opened, so it's an inside bar right now, but that can change a lot throughout the week, right? So this is what you have to watch for. If that pin bar, the bearish pin bar from the week before takes out the low, that's a sell signal. And that would confirm a fake out. And here's the thing. This structure that you can see here, we can argue that it's a three-legged structure, okay? We can make that argument. We can also argue that, it's part of a wave 3. We can make that argument too if you call this here, like this bottom candle right here, this pin bar, if you want to say that's wave 1, pulls back to wave 2, blah, 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 okay? And then you have like this 1, 2, whatever. No, I'm even confusing that. Never mind. But you get my point. What I see here, and this is the argument that I made on the trading view thing, I see 3 legs very clearly. And 3-leg structures are corrective patterns. They're not impulse waves. So if this is not an impulse wave, then we're still in that broad wave 4. All right. Now, someone asked about confirming that. So I'm going to answer that question momentarily. But I just want to mention that it's still possible, even with what we have in place right now. It's still possible that we're in a broad consolidation. And we'll talk about, I'll share those signs in a moment of what to look out for to either confirm that we're in the wave 5 or not. All right. So let's go now to the Nasdaq. I'm trying not to talk too much, but I talk too much. All right, so let's go to the daily on the Nasdaq here. Now, here's the thing, right? Look at this. That's a very strong-looking chart. Higher low established today. Look at this candle. This thing's up almost 200 points today, and it looks like, you have this in place, that's a strong market. Can't argue with it, right? Maybe this is the holiday rally that I've talked about previously. It's just going a lot faster than I expected. So what do you do here? If you're not in this, you could take some chances here with this. This is a buy signal, and you would have to measure your risk from this low over here. Now, again, that's going to apply to market-sensitive stocks like, semiconductors, AMD, all those type of things. We'll take a look at some of those if you want, if you put them in the chat. But basically, if the Nasdaq turns over the following week and breaks that support, then we're likely to consolidate. Meaning maybe it'll pull back a bit, it'll gyrate around, find a bottom, and then that would be the broader higher low, right? And that would be a nice, I would call that an aggressive long, but I would be very interested in that type of situation if it can give me such structure, especially going into the holiday season, right? But at this point, this is all we have right now, and I can't argue with it. That's a long. So at the same time, where are we? Whenever you see those signals, right? A signal by itself is useless. You have to see, well, what are we buying into? You're buying into all this resistance. So it's very possible that this thing can find trouble up in this area here, because look where you're going, right? You're going right into this. So it's possible that we get another top develop and blah, 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 and this and that over the next few weeks. Now, that's the S&P. I'm sorry, that's the Nasdaq, right? Let's take a look at the S&P real quick. SPX USD. New highs. We have new all-time highs in the S&P. I'm so glad I'm long, right? As Seinfeld might say. So that's a pretty significant thing right there, all right? Now, what do? Do you buy this? As you know, I have a very specific rule. I don't buy highs. I don't care if this thing is going to 10,000 tomorrow. I'm not buying it. All right. If I wasn't willing to buy it here where the risk was attractive, I'm not buying it here. Look, there's not one red candle. We had Friday's candle, which was like this little mixed doji type of candle at the resistance. We never took out that low. And now look at this thing. So it looks optimistic. You turn on any mainstream, stock market. The stock market, new all-time highs. We're going to go higher forever, blah, blah, blah. This range right in here, this area, is a highly vulnerable area. You can easily fake out there. Kind of like the way Bitcoin rejected 67K. That's very possible here. Now, keep in mind, I'm not a bear. All right, so I'm not calling for like a market reversal in a bear market and blah, blah, blah. I'm not, because there's nothing bearish about this structure. But I like to see support levels. I like to see pullbacks to supports, and I know they will come if you just wait. So Waiting, technically is easy to do. You don't have to do anything to wait. You just do nothing. But psychologically, waiting is very hard to do, obviously. I get a lot of questions about it. People hate waiting, especially when the market's running away without you and this and that and blah, blah, blah. And by the time you finally press that button, the top shows up. Okay, so I want to see a pullback. This pullback into this area, right around there, okay, would be a higher probability location. That's all I'm interested in. If the market can't give me a higher probability, I'm really not interested. 44.30 area. So you could say maybe 44 even, low 44s. Right now we're at 45.65. So that's a good 150 points away, something like that. That could take a week or two to develop, and that can begin with some kind of bad company report or some kind of other political situation or whatever. It comes out of nowhere. No one sees it coming. All right, just a real quick point about that. Bitcoin, people were saying at 67K, it's just getting started. When you hear that, it's just getting started, and you look at the chart and it's at a high of some kind, run away, please. Like, don't go for, it's not just getting started. Where were these big mouths at 40K? Where were they at 30K? Where were they at 10K? Where were they at 20K? It's just getting started. At 65K, at 67K, stop with that. Okay, so I hope you understand that. I see that all the time. It's just getting started. Okay, great. I just bought the top. Thanks a lot, Mr. Thanks, Captain Obvious, right? That's the Captain Obvious phrase. All right, anyway, let's move on here. I'm really in a ranting mood today. Let's talk about gold and the dollar, because gold is looking good too. Look at gold. Now, I've been having a problem with gold because I don't like what's going on with the dollar. So this sucks a lot of people in. Oh, gold is gold is going to go to the moon now and this and that. No, it's not. You're going into a resistance area again. This is the problem. And a lot of altcoins have a very similar problem. So do I like gold generally strong? Yeah, I like gold strong. I mean, this is a consolidation. You see this really, I talk about this almost all the time. This elongated consolidation that's over a year old, right? You see that? From the previous August high all the way over here. You see that? Well, Bitcoin, it's possible that Bitcoin can go into something like this. I mean, there's no evidence of that yet, but I suspect it still can do it. But gold is going back into that resistance. Not a good place to be buying it now. If you're in gold, hey, great, let it ride. Maybe take a little off the table if it has a problem near that resistance. Otherwise, don't buy it here. Wait for a better price. It's consolidating. And your chances of getting maybe a low point in that consolidation are still possible. This is not a full bullish trend. You understand that? So here's the thing, and here's why I'm so hesitant on gold. Right? Let's take a look at the dollar index. This is not a bearish chart. You see that? Clearly. Higher lows, higher highs. Yeah, we have this double top failed high situation recently, but look what's going on now. This here established a higher low. Right there. So that's not bearish. If the dollar rallies to new highs, which again can be stimulated by something the Fed says, whatever who knows, right? Some unexpected piece of news, and now the dollar is pushing highs again. Gold is going to go right back to 1750. So I know other variables drive gold besides the dollar, but if the dollar continues this strength, and it's starting to now, then it's going to put pressure on gold. So if you're not in day trades for gold, then I think swing trades were just not at attractive levels. So I would avoid gold and other metals too. Now, that's the main things I wanted to cover. Let me just show you real quick. Let's take a look at the bond market. You should always keep an eye on this thing. You can't look at it like candle to candle, but you want to look at the general locations. Notice, failed low developing on the bond market, okay? But what is going on here? The recent structure, what do we see? Lower highs, lower lows. This structure right now, this little push, is likely to give us another lower high, unless it proves something otherwise. What will it have to do? Produce a higher low and then start taking out these resistance levels. Until it starts doing that, I have to assume that it's going to continue to push lows over the next few weeks or whatever, which implies rising rates. If rates are going to rise, I'm talking about interest rates, that means the dollar is likely to stay strong. So I don't know where gold thinks it's going in that environment. There's likely to be pressure, or any other type of metal. All right, so that's that. Let me move on now to your questions. Let's see how long I've been talking. Oh man, I've been talking a long time. Someone's got to stop me. All right, let's get to your questions now. I usually like to get started on the questions earlier. All right, but I answered David's question. That's why. Now let me go to Shib. He asked about, his question here is, if in pursuit of NGU, I'm not sure what that means. How would you distribute percent portfolio Shib to BTC? Let's talk about Shib for a moment. I like to say, stop the bullshib. All right, SHIB USDT, because I have some comments about this. What is this thing up right now? Another 15%, right? Okay. Chart looks interesting. I've been watching this ever since I've spotted some of those hype videos. A couple of things I've learned about these coins. SHIB is what's called a meme coin. All right, I just learned what that word means recently because, you know, I'm not a millennial. And it means it's a joke, right? A meme is basically like a joke. There's really no substance behind it. You can have meme stocks. You can have meme coins. So basically, this is a coin that doesn't have any real fundamentals behind it. It's pure hype, right? It's just driven on nonsense. It's herd mentality. So that means a couple of things for this type of chart. For one, chart's not going to help you that much because it's just going to be very emotional and very random. So chart structures are going to be a lot less reliable when it's just purely driven on hype, because there's nothing behind this, right? This coin doesn't really offer any value. It's like a video game, or it's entertainment. It's like watching professional, pro wrestling. It's a joke, right? So with that being said, it's not an investable asset. It's a lottery ticket. I have watched videos that say that SHIB is going to make you a millionaire. If you just invest $1,000, the idea is, hey, you could lose 1,000, but you could make $1 million. Look at the reward risk. That makes sense, right? Just buy it. But here's something to keep in mind. A true opportunity that really has that type of potential is not something that's publicized and everyone knows about it. When everyone knows about it, it's a bad idea. Because all you have that are piling into this are mindless retail traders and people that watch TikTok and all that kind of stuff. They're piling in because they see it's working and they don't realize how quickly this thing can turn, right? So if you want to play the lottery ticket game, okay. But here's I think the most effective mindset for something like this. Because again, chart's useless. If you want to throw in $100, you want to throw in $1,000, the mindset is just think, hey, this is going to go to zero. So you're going to throw $1,000. I don't care if I throw my $1,000 out the window. It's just going to go to zero. So I'm just going to make a donation. That's the best way to think of this, because, hey, maybe it goes somewhere. But the thing is, if you're going to play that game, you have to play it with all the coins, because there's no way to know if this one's actually going to do it, especially since they provide no value. There is some talk, oh, it's going to go to 1 cent. Do you know there's like trillions of coins, or there's a very, very large coin circulation available? So it's not going to do that. It's not likely to do that, number one. Number two, if it made it to 1 cent, it would have the same market capitalization as Google. Google controls the internet. Google organizes the internet. They provide a lot of real value. This is a game coin, right? So you get the idea. So how much Bitcoin should you put into SHIB? However much Bitcoin you want to lose, that's how much you should put in, right? Just think, it's going to go to zero. That's the best way to think of it. I don't care how good this looks, because it could turn just as quickly. There's no substance behind this. My guess is that whoever bought it all during this time and accumulated tons of it, they're just hyping it and they're unloading what they bought onto retail traders and millennials who don't know any better. Okay, so that's my rant on SHIB. I don't like these coins, but hey, you want to play it's a lottery ticket, you want to play that game, understand what you're playing. Okay. Oh, Gmail sent me 500 coins. Thank you so much. Closing my recent Bitcoin trade. Okay. Extremely green day today. Taking something off the stocks table. Oh, cool. I appreciate that. Thanks. I'm glad my analysis helped you make a better decision. I'm not even on TradingView, and the guy sent me some coins. I guess he's making up for all those times that I haven't gotten any coins. That's okay. Thank you so much, G-Man. That's very generous of you. Okay. Very nice to see. Okay. Especially when I'm not on TradingView. So anyway, that's my SHIB rant. Let me see. Elizabeth. Okay, so I gave you a bi-weekly anti-FOMO check-in. Yeah, so I saw that, and that's why I mentioned that whole thing about sizing. Because again, like I said, you want to play a game, you want to get involved a little bit because something seems to be running away, just go in smaller, right? You can still win, but if you lose, which is a highly likely chance, you lose smaller. Here, one thing I want to mention, since she mentions that, there's just something I want to say. People don't realize how against us the probabilities are stacked in this game. As a retail trader, I would say most of the time, probably 95% of the time, things are not in our favor, even though they may not look that way. Like this, like, oh, it looks strong. This is going to keep going higher, right? So you think that probability may be favorable for something like this, but it's actually not. There are so many things working against us. Keep something in mind. As a retail trader, we don't have institutional connections. We don't have big money in our accounts, right? That's typical retail trader does not. You don't have political connections. You don't have exchange connections. You don't have any of those things that the large players have. Those are advantages. Information, insiders, right? If you're a fund manager, chances are you know CEOs or you know people that that are on the inside of some of these companies that you've invested $50 million into. And of course, you can invest $50 million because you know what's going on the inside that the public does not know. That's valuable information that you can make a true judgment on. As a retail trader, we have none of that. So you have to realize that most of the time, things are not going your way. Our role as a retail trader is to basically take the risk off of the smart money. That's basically our economic role. So you don't have to think like a retail trader, right? You can think like an institutional trader. You could think like a professional trader, even though you don't have the advantages. You can at least align yourself with their thought process, and you can manage your emotions and your account more effectively that way. I mean, that's really my whole premise. Okay, so let's take a look at the rest of the questions here. Checking out from Alicante, Eastern Spain. That sounds nice. I'd like to check out Spain. I could speak some Spanish. All right. Oh, Dan from Rune. So thanks for reminding me. So let's take a look at Rune. Oh, yeah. Look at that. Okay. So people have been, I think, Dan, you may have asked about Rune my previous stream. This thing is going vertical, right? It's doing I guess it's following along with SHIB and all the other nonsense. So in these situations, that's herd mentality. It broke out of this consolidation. But the buying opportunity is over, okay? Because once it broke out from here, had the higher low and all that other stuff, if you had taken that chance, okay, great, vertical. This is what you want to see. What, it's up 5% today? It's up 65 cents. Can't buy this now. Let's take a look at where this thing is, relatively speaking, right? Look at this. So your basically price is now going into this area where there's a lot of previous price action. This is a resistance area. You have other resistance areas ahead of you, right? You have one over here too. So you have like this one over here where it's basically fooling around in that vicinity right now. And then you have one up in here. So if you're in from a good price, this is a great area to take a little off the table. You don't have to take it all off. There's no sell signal here, but the risk is too much. That's why I wouldn't buy this, right? I don't buy highs. But theoretically, this thing can run a little further. 13.75, right? That's this next price here. And then 16 and a quarter area up here. Those would be good targets to get out of some of your coins if you have some. But buying new coins or buying new whatever, no way. So if you're not in it and you'd like to get in it, you need to see a pullback to a support. And where is the next support on Rune? It's around here somewhere. It's in this area. So what price is this? $8.95, around there. So if you can get something between basically 9 and 10, like just something in this area right in here, and you get a reversal off of there, that would be a sensible area. That's a reasonable area that can attract buyers. It's a good location where you do have that consolidation right in there, because that can act as a support. That's why that's important, right? So that's where I'd be looking for an opportunity, not now. The only opportunity that exists here is for people to get out, for the people that are willing to take that risk at much earlier prices. So that's how you treat this. You see, you have people like on Robinhood or whatever, those mindless type, and they see stuff like this. They watch some YouTube videos and Rune is going to make you the next millionaire. So they go and they buy it and they get stuck in the same situation. Now, they go into hope mode. Sometimes hope will work out. But the problem is, if you depend on hope, it works out on occasion, but most of the time it's not, and you're going to get caught. And when you get caught, any money that you made with your hope is going to, you're going to give it back. So that's one thing you need to keep in mind there. Something like this, I don't know what the story is with this exactly, but at least you do have some decent chart structure here that you can work with as far as swing trades go. All right, so thanks for asking about Rune. Okay, Shorte, thanks again for stopping by. Eligius from Lithuania. Oh, by the way, anyone wants to share what country, people just do it automatically now. If you want to share what country or city you're from, that's always a cool thing. I'm broadcasting from the greater New York City area, northern New Jersey, in case you couldn't tell from my accent. So Eligius, Pfizer stock, okay? Pfizer, PFE. Let's take a look. So Pfizer, see, one thing about these stocks, the pharma stocks, the biotech stocks, they have a tendency to trade more on their own because they're more news driven, right? Based on their specific industry and whatever pill they have coming out and blah, 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 right? If it gets approved and this and that, whatever. So the chart structures tend to be more reliable compared to, I need the S&P to rally 500 points for this stupid stock to go anywhere. It's not as correlated to the S&P. So with that being said, you have a support over here at 41.64. Now, so I'm not going to talk about the S&P correlation. It's not going to matter for really a stock like this because the S&P is up big today and this thing is giving you a red candle, right? So it doesn't really mean anything. So what you want to see on something like this is you have a potential structure change beginning. The bearish pullback, right? The corrective move, lower highs, lower lows, double bottomed in that 41 area. This initial push has taken out a minor resistance. You see that right here? That is an important sign. Now, what you want to see, because this could be the beginning now of a new bullish structure. The previous structure is bullish. Look at this move from August. So now that the corrective move is over, you may now be in the next bullish leg. So what you want to see here for a long, since this is the initial move, no reason to buy it at the top of the initial move. Why? You have all this risk. You basically, if you buy it now, what is this, 43.08? Your stop would have to go basically below 41. Meanwhile, this thing is poised to pull back. So what I would watch for on something like this, look for the higher low. And this was the same for the Nasdaq, before the Nasdaq went nuts. The higher low or the double bottom, okay? That's what you're looking for over the next couple of weeks. If it can give you one of those looks and you get a reversal, that's a much better time to take risk for a swing trade. The Nasdaq gave us a higher low, right? It basically stopped here, and now you see where the Nasdaq is. So you can look for something similar like that for this stock here. Those are the levels I'd be looking for. So basically 41 area, if it can get back there, or this area here, which is around 42.5, something like that. Those would be the price points or your interest area, price interest area, where you should be looking for reversals to go long. All right, does that make sense? But yeah, generally, it's good to see that the structure is changing. This is basically how a conservative trade comes together, because you're not stepping in at lows, and the price is proving that something is going on here, and that corrective move is no longer in play. All right, like I certainly wouldn't want to be shorting that after this type of move. So thanks for asking, Pfizer. All right. Oh, Schwartz mentioned AR. I'm sorry, Schwartz. I skipped over you because I'm always talking about International Man of Mystery. Let's take a look at AR. So now AR, this is a consolidation, right? Just like some of those other coins, the same look that some of those other coins gave us before they broke out, right? What was that one coin we just looked at? Rune had like a sort of a consolidation. I mean, even SHIB had a consolidation. Many altcoins I've noticed are in these consolidations. They're in these ranges. So with something like AR, you're in the middle of the range right now, and there is some kind of support there. All right, that's a minor support area. Current candle is giving us a bearish pin bar, but I would not give that much weight when you're in the middle of a range like this. This is a very highly random area. So for something like AR, if you're anticipating the breakout and you want to, maybe you own some, maybe you're looking to buy some, I mean, you could probably wait to get a better candle, at least get a buy signal out of it, and you could measure your risk off of this little mini double bottom area, which is what, $51, right around there. That's where your stop would have to go, something like that. And you'd be basically betting on the breakout. So if you get a strong push after that, you get in, right, breaks this high over here, what is that, 58, and keeps going, then you can have a breakout on your hands, like some of these other stupid coins that are just breaking out, right? It can basically do that because that's what the structure says. Now, the other scenario for something like this, if it breaks the support where it is right now, the current candle says it's going to try, right, bearish pin bar, but again, it's highly random, so I can't give that any weight. If we push lower and you break this support, this 48 area, whatever that is, we can round that to 50. It breaks that support, then it's possible that AR can test the range low. This would be right here, that area, which is what's this price here? 38. So around that $38 area, that's a high probability location. It's the range low. So if the consolidation is going to hold and it turns into a higher low consolidation, that's the best place to buy it. If it can give you that confirmation there and reverse there. Okay, that's where your reward risk is going to be the greatest and your probability is going to be most favorable there. All right, so those are the areas to look out for. Like I said, if you want to get involved now because, you know, it's trying to reverse, okay, but, you know, one way you maybe want to compensate for that is going a little smaller than you usually would. So if it turns out to be random and it breaks lower, hey, you don't have to take a big loss. Or maybe you want to add to it when it does something like that. With these kind of coins, I mean, if you're small enough over here, you can play that game. All right, the key is not to get too big too fast. And if it breaks out, great. Keep in mind, it can have a problem here at the high again. Also, I don't know what the story is as far as Bitcoin. Another concern you have to have is, you know, Bitcoin made that new high recently. Ethereum made that new high, and this thing is not, right? So that's a sign of relative weakness. It doesn't always apply to these coins, but just something to keep in mind. Because Bitcoin, that little pullback that we saw from 67K to 59K, that was like an average pullback, I guess you could say. That wasn't like a dramatic one. What if Bitcoin pulls back to 50K or something like that? Where are these going to go? So when they're not rallying, like this thing should look like Rune right now. That's the way it should look, and it's not looking that way. So that means something. That means money's not flowing into this for some reason. So there is a sign of relative weakness there. All right, so I just wanted to make sure that you understand that's another layer of risk you have to keep in mind. All right, so we looked at PFE, looked at AR. Sean, can you check the semis, SOX? Yeah, sure. So semiconductor index, let's see, the SOX. Now, the semiconductor index is a big driver of the Nasdaq, right? It's all the semiconductors, very popular index. So here's the thing. This thing is consolidating near a high. Now let's take a look back. Let's zoom out a bit and see how that consolidation, you know, the context of it. I mean, the general trend of this thing, clearly, as we know with the Nasdaq, is bullish, right? That's pretty clear, pretty easy to see when you look at it from this perspective. Now, as far as where it is right now in its little more recent consolidation, you're at a possible lower high here. Now, these things are tricky, right? They do this all the time. They go into a vulnerable area, and then I come out and say, oh, it's very vulnerable here. And then what does it do? It goes higher. Right? It's very vulnerable here too, and it's even more vulnerable here, and it's even more vulnerable here, and everyone's like, you're full of it. Stop telling us it's vulnerable. I'm going to buy it. And then they buy right here, and then it fails. Right? So it's in one of those situations where it's vulnerable, right? It can easily turn here. This wouldn't be a place I'd be looking for longs. I don't care if it breaks out. I don't care how amazing it looks. I don't care what kind of company reports come out. None of that means anything to me. You know why? Because we are not here. And that's where I would be interested. So this is going to drive a lot of this. This is a reflection, I should say. It's not going to drive. It's a reflection of all the semis, right? AMD, NVIDIA, Intel, all those. So this is a higher risk area or lower probability area for longs. Let's take a look at AMD. Look at this. So AMD is breaking out. I'm sure everyone's going nuts. AMD, new all-time highs. Okay, so, but the SOX, as you can see, is not doing that. So how far do you think this thing is going to go? How about, what's another one? NVDA, right? NVIDIA, all-time highs. So they're in vulnerable areas. What's another one? I mean, do we have to look at Intel? Oh, that's Intel? Is that Intel? Oh, that's not good. They're not doing well. All right, forget Intel. Obviously, it's not performing like the others. What's another semiconductor? I can't think of one right now, but you get the idea. All right, so they're all pushing highs while the SOX is not pushing a high. The SOX, in this situation, the semiconductor index, you can basically treat this like the Nasdaq. It's the broader index, and it should be making higher highs, right? Especially when you have leaders like AMD and that type of thing. NVIDIA, which is a FANG, almost practically a FANG stock, this thing should be doing better, which means that they're vulnerable, right? That's the way I would view something like that, and I would not be buying those breakouts. Great place to sell if you have some. Great place to take some profits, right? Lock in something while all the Robinhood traders are piling in. So thanks for asking about that. It's a good comparison when it comes to relative strength. People miss that relationship because it's not obvious. It's not intuitive. It's one of the first things I learned when I got into this business. So Andre, what would you consider as a confirmation? Right, so Andre, thank you for asking this question. What would I consider a confirmation that we're out of wave 4? That's a very good question, because when it comes to Elliott wave, and I was showing you the weekly before, this can be very tricky, right? Elliott wave is very subjective. Now, what I'd like to see, we rejected that 67K quickly. So when I saw that rejection, all right, it's still possible that we're in a wave 4. And at this point, even now, it's still possible. And that's why I bring up the weekly chart, okay? Because if this three-legged structure, if this proves to be a three-legged structure, which is normally a corrective structure, this is likely to be a wave 4. And if this is a wave 4, as we saw with something like gold, going back to the middle of the range is very reasonable. Of course, that can take a month or two, but it's reasonable. It's not something that's unreasonable right now, if that makes sense. So that's a risk that you have to keep in mind, right? Now, what would confirm that we are out of wave 4? So let's go back to our daily chart. What would confirm for me is we need to close above 67K, right? I need to see the high 60s. I need to see price close up in here somewhere, and I need to see strong candle close, right? I need to see vertical candle. If we can do that and sustain it, then I will be convinced that we are in wave 5. Okay, now it's not the beginning of wave 5. Wave 5 has obviously been, that would just tell me that wave 5 has been in play since 30 or 40K, right? So what does that mean? What do I do now once I realize, or once we're confirmed that we're out of wave 4 and likely in a broad wave 5? Well, all that will mean is I'm still interested in the same thing. I'm interested in longs. I certainly wouldn't be, if I were to short, I don't short Bitcoin, you all know that. But if I were open to shorting Bitcoin in this type of situation, that would be something that I'd have to take off the possibility list, right? You should not be shorting into a wave 5, a bullish wave 5. Those waves are very powerful. They're like wave 3s. They can extend. I mean, a wave 5, if that confirms and it stays that way, a wave 5 can take this to 100,000. It is possible. I don't like to throw around those big numbers and fill people with hope, but I also can't argue with, like, I know a wave 5 of this magnitude, I know what's within reason, and in that situation, it would be within reason. Of course, it wouldn't happen overnight, but over a couple of months, maybe a 1 quarter, 3 months or something like that, 4 months, something like that, it's possible. So I would be looking for the push to 68K and sustain. We close up there, we stay up there, we hold up there, we don't really pull back, that kind of nonsense. then we're probably in the wave 5, and I would just be looking to buy pullbacks, just like other times. Maybe more open to taking aggressive trades, right, in that type of situation, because I know how they can extend and be very reluctant to pull back in that type of wave. But if we are not in a wave 5, then 50K is very likely, right? So just a couple of scenarios to keep in mind. And what would signal that 50K is coming soon? We start breaking supports, right? And your first support would be that 60K area. If you see like 59, 58, 57, right, we start pushing back into those mid 50s, you get the idea. So that's where, adjusting to market information, instead of having some kind of absolute idea, oh, this thing's going to run to 100K. My fake guru told me, I'm so happy. I'm just going to bet on that. That's a fixed idea. You cannot have a fixed idea. The market changes and then you have to adjust, right? That's the sign of a trader. All right. So let's see what else we got here. So that was thank you again, Andre, for asking that question. I hope I made that clear. Avi, I saw that you recommend on ETH. Could you give us some details? Oh, okay. So Avi, you must be referring to Andrew's thing, because I don't trade Ethereum. But let's take a look. Usually Elizabeth asks about Ethereum. Let's take a look. So here's Ethereum. Now, Ethereum, the 4K break on Ethereum was pretty significant. But here, look where we are. Just look at this, right? And you should do this exercise on your charts as well. Always look back. Like, it looks amazing right now, and you can watch dozens of YouTube videos on how you're going to be the next millionaire, by buying Ethereum. But look where you're buying it. So is Ethereum bullish? Yes, we have higher lows, and theoretically, it should make a higher high. Now, just like Bitcoin at 67K, Ethereum quickly rejected this area before. We could see the bearish pin bar, but that bearish pin bar didn't go anywhere, right? There was no follow through there. And this structure, this more recent structure, higher lows and higher highs, that's still intact, okay? So until we get some kind of sell signal here, I have to assume that it's going to go for the higher high, right? That's within reason. You're going to have to measure your risk from this low here, which is 39.35. You could probably round that to 39 even, something like that. Now, those are the structures that are in your favor. But if this thing generates a sell signal, which is very likely in this location, especially since we saw one just a few days ago, it's possible we get another one, it could turn into a double top or whatever, then that's where a deeper pullback is likely to follow. That is what you have to watch out for. This line that I drew here coincides with a pretty significant resistance. I mean, look at the reaction that we got off of that resistance back in, what was that, May? That's when Bitcoin pulled back, that, 52, whatever, 10,000 points or whatever, in a few hours, whatever that was, 12,000 points, whatever that was, right? That's the kind of reaction you got there previously, and we're testing those levels again. So you just have to keep that in mind. It's not an attractive location. It's definitely not a high probability location for long. So like I talked about before with Bitcoin, you want to see some sort of pullback to a support, and that would be a better location. Doesn't mean you should avoid this. Just understand the risk you're dealing with. And if you're willing to take a trade up in this area, it's probably a good idea to take a smaller amount, because the chances of failure are high. Like I said before, most of the time, things are not in our favor, okay? Most of the time as a retail trader. And getting sucked into things that look good, especially when the whole world agrees that they look good, is usually a bad time. But also another sentiment example. Around my local area here, there are billboards that say buy Bitcoin. Billboards, all right? When you see something like that, that's generally not a good sign. Where were these billboards when Bitcoin was at 40K? Where were they? Why are they coming out now while Bitcoin's on highs? You see that? That's the herd mentality. So it doesn't occur like just because a billboard comes out doesn't mean it's going to turn up tomorrow and go bearish and blah, blah, blah. But it's a highly vulnerable, highly risky area. It means that the whole world is long and they're running out of buyers. Now, when I say something like that, again, I get a lot of criticism. How could we be running out of buyers? The world, there's 4 billion people in the world, and they're all going to buy Bitcoin. And all these companies and all these insurance companies, everyone's going to buy Bitcoin. Bitcoin's going to go to 1 million. How could you say we're running out of buyers? Because there's a population that's active in any financial market. There's an active population, and when the majority of that population at the moment is full, right? They've all bought. Then there's no one left in that population to continue to buy, right? And then all the people that are stuck in this thing start to sell, and you know what goes on from there. Anyway, that's the idea behind that, and that idea is nothing new. It's been around since the markets have been around, right? They used to talk about the shoe shine boy 100 years ago. The shoe shine boy gives you a stock tip. It's time to get out. It's the same idea. It's the herd mentality. All right. So good question. Travel. Hey, all right. Good to see you, Alex. Got a question about Elliott wave. Yesterday you wrote about potential ABC, right? Right. Can you get into some more detail? Okay. All right. So I mentioned that when I talked about the three-wave structure here. Let's just go back to Bitcoin real quick so I can just address something here. Just to make, I hope I make the answer clearer. This, as far as ABC goes, right, or the three-legged structure. Again, I don't like to make it complicated. It's, you know, Elliott wave can be confusing when you start counting previous waves. And you say, okay, I have 5 waves over here, then I have an A, B, C correction, and now isn't this the next 1, 2, 3, 4, 5 type of situation? It doesn't have to be, because there are these motive waves called triangles, and they're consolidations. And usually inside of a triangle, all the waves are 3 legs, right? So a 3-legged wave, which is what we can see here, right? Where that's one, A is the first one, B is the second one, C is the third one. If that's the case, then all that means is it's correcting this previous corrective move back here, right? So if you want to call this the first ABC, the correction off of 64K to 30K, you want to call that your first corrective move. This is correcting that, if this is truly a corrective wave, right? So that's why I still argue that it's possible at this point that it's a consolidation. I hope that makes it clear. Instead of, like, when you say, well, instead of a 1, 2, 3, it could be a 1, 2, 3. But you know what? When you have, in order to prove that we're in an impulse wave, we need 4 waves. 3 waves are not enough because you can have this corrective move. Now, if the next leg pulls back, and on a weekly chart, okay, the next leg pulls back, and we have a wave 4 that's easily defined and clear, and it doesn't overlap wave 1, then we can argue that we have an impulse wave, right? But that's the difference. Impulse waves, before it completes, you can count 4 waves. All right. So that's actually a viable strategy too. You can look for 4-wave structures and then anticipate wave 5. You know, you can do that on any time frame. And if it's an impulse structure, you're more likely to get that wave 5 before the whole structure changes. All right, let's move on here. Thanks for asking. Okay, Avi, okay. Oh, no problem. Elizabeth, do you see head and shoulders possibly on Bitcoin? Good question, Elizabeth. If you're referring to this little structure right here, like possible right shoulder over here, and then current candle area, another possible shoulder, I see what you're talking about there. It's possible, but the thing is, I don't put a lot of weight into those type of chart patterns. They can appear randomly, number one, and especially like in a bullish trend, they show up all the time and they get people short for no reason. So while I see what you're talking about, I wouldn't put much weight in that. Instead, I would be looking at the levels and the structure, right? Now, if this fails here and turns into like the right shoulder, which is what you're describing, well, then what it should do in that scenario is take out supports. And that's really what's going to be more important for me. I wouldn't short, if this was not Bitcoin, let's say this was the Nasdaq, or this was like something like the Euro, something that I would short. If it looked like this, I wouldn't short it. It's still too early. And trust me, I've made the mistake of shorting things too early many times. So now I know what to look for when I'm looking to short. And there's a difference between an aggressive short and a conservative short. In a situation like this would be lining up for an aggressive short. And we talked about these all the time if you were interested in something like that. But like I said, if this was the Nasdaq, I would be more open to the possibility if price action confirmed. but I still would be cognizant of the idea that it's aggressive and that the trend, because it would be counter trend, the trend is still bullish, which means that trade can turn against me pretty quickly. Right? All you need is some stupid news. Next thing you know, Nasdaq is up 200 points. Okay, so thanks for asking. Peter, would you mind checking ADA? Sure. ADA, Cardano. Cardano is supposed to 50x very soon. The next millionaire maker right here. Okay, so Cardano. That's a very nice looking consolidation. What I like about these, so this is, look, Cardano and the rest of these junk coins, they're driven on, a lot of these are on hype and specific news events, right? So, oh, they're gonna upgrade their chain or whatever nonsense they come out with can spike this thing. Now, what you have in your favor in this type of situation is in this consolidation, as you can see, it's going nowhere, right? But that's a higher low consolidation relative to this structure back here. So if you're interested in something like Cardano, this thing has bullish potential based on this structure. And obviously it's not paying much attention to Bitcoin or Ethereum because it's stuck here. I mean, this thing's up like 2 cents, whatever, while the rest of the markets they've been going crazy recently, right? Now, this thing can have its own turn if some news comes out. And what you want to see is you want to see this range break. Now, you want to get in earlier. You want to buy into this thing now. You're playing the consolidation game. Now that can also turn the other way on you. Keep something in mind, right? What makes the consolidation game compelling? And this goes back to something like GameStop or AMC. Remember those ridiculous stocks? Well, something like GameStop, right? When there's a shortage of shares or whatever, right? It's a low float stock. And one side of we saw consolidation not too long ago. We called it a long and it went crazy. The reason why that works like that is because one side of these people in this situation here are usually short, okay? One side of this population is usually short. So when it goes, they all have to cover. And that's why you get a big, pronounced, dramatic move, especially if there's some kind of news behind it. So you could play that game and you can put your stop somewhere way below the consolidation low. Right, that would be this area here. What is that? Basically 196. You could probably put that a little lower, 195, or you want to give it a little more room, 185, something like that, because it shouldn't go there. If this thing is going to break out and do something spectacular because of some news or whatever, because that's what's going to spark it, that's what's going to stimulate it, then it has no business going the other way. So if it goes there, that means everyone's getting out of it and you should take your loss, right? So that's how you're going to have to measure your risk. And then at this point, so if you buy this based on that, it's just a matter then of waiting for the news to come out or whatever. And when this thing goes, I got Cardano, look, it's going to go 50x like the fake guru told me it was going to do. But you do have that potential for at least this thing to test this range high, because that's what you're looking for, right? That the reward risk would make sense. $3.10, right? That would be a place to start taking money off the table if it can make it up there, especially if you're only risking, what is that? It's at 215. So if you're risking about 50 cents, something like that, maybe 45 cents to make, what is that? What would that be? Almost $1 or something, maybe more if it can keep going, then your reward risk makes sense in that type of situation. So it's not a bad structure. You just have to understand the game you're playing in this type of situation. The chart itself, I mean, this chart's not really going to help you do anything, right? You can't judge this right now and say, oh, I think it's a long. The structure says long, and it's in a location. It's in a good location for that type of breakout. Just you need the catalyst. Maybe you can find some inside information. Maybe you could hook up with the guy that created Cardano, and he can tell you his next big event, and and then you can start piling in like all the smart money does. Okay. Anyway. So that's Cardano. Not a bad idea. Just understand what can go wrong, and if it goes wrong, don't get stuck in hope mode. Take the loss, okay? All right, and it shouldn't be more than like 50 cents. Thanks for asking about that, Peter. Definitely a good one for the radar. David, okay, so I went over Ethereum. Thanks for asking. From Miami. Oh, yeah, I like Miami. Nice place. Hey, go forth. Good to see you. Cenk from Vienna, Austria. I saw on the economic calendar, I think it was Austria Day sometime this week. I think there's some kind of holiday over there. Cool. Let me see. Savi from Brooklyn. Savi, how you doing? I know they don't talk like that. I say that every time. Okay, cool. Elizabeth, can you start from the beginning? Okay, I'm not sure what you mean by that. Mario, can you repeat that, Elizabeth? Not sure what you mean. Mario, can you have a look at FTT? All right, let's take a look. FTT USD. Sorry it's taking me like forever to get to these. I know I talk too much, and I was in that rant mode in the beginning there. Okay, so FTT. Let's take a look here. So this thing is starting to perk up now, right? Let's take a look. General structure is bullish, but let's take a look at what's going on around your location. So you have an old resistance there, which broke a couple of times, right? It broke higher, then broke back below it. And then you have like resistance here, right? In this area somewhere. Do I have anything before that? No. So you have something around here somewhere in this area. So like many coins, you know, they're not at supports. They're at resistance levels. You have to decide, right? Similar to Bitcoin, there's a higher low in place. Similar to Bitcoin, there's a buy signal in place now. But you have to decide, are you willing to take the risk here? And how much risk do you have to take? Well, the range low is 59.90. So you can say you want to round that to maybe 59.5, maybe 59 even, give it a little room. Price has no business testing that low if this structure is going to stay intact. But the probability of the area is not exactly favorable, right? This is a resistance area, and you're going into more and more resistance. Now, can it test these highs? It's possible. It's possible. The structure favors that. But what if Bitcoin gets stuck and starts giving it back? Are you going to be stuck in this vulnerable area? So if you want to give that a try, you need to be prepared for the failure or the sell signal that can develop somewhere in this area, right? Somewhere in this vicinity. You could get a sell signal somewhere in there very easily, and this thing can turn into a double top. So that's what you need to be prepared for and be prepared to adjust. Now, if you've risked, what's the price of this thing right now? 44.87, so basically 45. And the low here again is, I'm sorry, hold on. Am I reading these numbers right? I'm sorry, 66, I'm sorry. 66 is the high, 64, so 65 is basically where it is, and 59. So if you're risking about 5 or 6 points right now, and you want to play that game, you need to make at least 5 or 6 points to justify the risk. So perhaps you want to do it with a smaller position or something, but like for example, if you're up like 3 points and it's giving you a hard time, even though you have not justified the risk, you have to be cognizant of the area and say, hey, look, I gave it a try. It's given me a sell signal. I'm up a couple of points. I should probably take something off the table or maybe close the position. You have to be prepared to adjust like that. If you're not, then you open yourself up to all of this vulnerability, and if it turns hard, you get stuck in it, right? And that's, so it doesn't have to be a bad trade, but it can turn into one. So you need to be prepared for that. But it's not a bad idea. Again, it's similar to Bitcoin, right? So basically, you're just like getting involved in a smaller version of the Bitcoin chart. And perhaps if Bitcoin makes that higher high, maybe it'll help carry this thing along. All right, so thanks for asking about FTT. Okay, Mario, well, let me see. I'm just going through the chat. Oh, so, okay, hold on. All right, so but Mustafa's asking about VET. Hold on, let me go over VET. VET, because I get questions about VeChain a lot. Now, look, VeChain looks similar to that FTT, right? It looks kind of, except it's a little more advanced. It's a little further ahead. Look where VeChain is, and I've been talking about this over and over. You're in this resistance area, right? So this is not, in my opinion, this is just a really bad place to be buying these things. Yes, it may continue higher. Yes, you can measure your risk from 12.84, 12 cents, 12, yeah, basically 12, almost 13 cents, right? Or just above 12.5 cents. You could measure your risk from there, but you need to make, what is this thing right now? 14 what? 14.08. So you're looking at about 1.5 to 2 cents of risk. You need to make at least that to justify this. What is this high over here? 15.72. So what is that? That's not even 2 cents higher, right? It's almost 2 cents higher if you can get here. And that looks like that looks like a kind of a, you know, an obstacle, right? That looks like this thing's got some work ahead of it. And if Bitcoin has a problem and Ethereum has a problem, this thing is in a great vulnerable area to sell off again, right? The place to be buying these things are support levels. Double bottoms off of support levels, right? Which Bitcoin gave us the same look over here at 40K. Does that not look like Bitcoin at 40K? The double bottom off of 40K, right? That's really your most attractive area. Look at this area right here. Double bottom, right? Off of this, something like that. We don't have that up here, do we? So just something to keep in mind. You want to take these more aggressive trades, understand that they're aggressive, and understand that they're likely to turn the wrong way soon. Okay? I don't want to scare people out of trade ideas. I don't want to discourage people from something that is strong and that may continue the nonsensical move, because markets are irrational, right? And you have a lot of people who have no idea what they're doing piling into these things, and you can capitalize on that as long as you understand what can go wrong and be prepared to adjust, okay? Whether it means tightening your stop, getting out early, taking a small loss, right? And that information should be prompted by something on your chart, like a candlestick confirmation or something like that. You should not be reacting to news, some fake guru, or some other irrelevant topical information that has nothing to do with your chart, okay? Because you're just reacting to old information at that point. All right, thanks for asking. Let me just move along here. I got a bunch more questions. I want to see if I can answer them. Kim, what is the confirmation of the pin bar that you told us in the article? Okay, so the pin bar, let's go back to Bitcoin. The pin bar is one type of confirmation. Of course, you know, there are varieties of confirmations, and you can get candle patterns that are made up of multiple candles and things like that. But the pin bar, this is the pin bar, right? It's the ideal confirmation. It's a single candle. It's a pin bar. It's got a long tail on it, and when it takes out the high of the candle, that is the confirmation. In this case, it would have been 65.5. I didn't specifically write it in the TradingView article because I can't give away all that information on TradingView because, you know, we have customers and stuff. So that's why I have to hold back on certain things like that. But so I give clues. That's what I'm talking about, right? Now, of course, this is in play. So it took out that high, and the trade signal is in play. And when something like that happens, if you don't have your buy stop in advance, and I saw that someone in the other chat room or whatever, someone wasn't sure what a buy stop was. A buy stop is basically an order that you can place. It's a stop order, but instead of getting out of the market, you're getting into the market. It's an order that you should be placing in advance. When the price touches your order, your stop order, it becomes a market order and fills whatever, you know, the next best price that's available. You should know order types, right? If I talk about a buy stop and you don't know what that is and you're putting real money at risk, you're asking for trouble, because I'm not saying you personally, but I'm just saying people in general, you need to know order types. You can Google that. Every broker will tell you what that is. Like, you should know the types of orders that you're using. You should know what they do. Very important, because you're putting money on the line when you're using them. So we usually use buy stops, stop loss orders, and limit orders for taking profit, because we can place all of these orders in advance. We're not reacting to anything. We see a signal that's possibly developing, we get some confirmation, we put the orders in, and now it's up to the market to do the rest of the work. It doesn't work out all the time. Sometimes it taps you into the trade and then stops you out. That happens, but it's more effective than reacting and saying, oh, look, price, I feel this way. Oh, I think it's going to do it. Oh, everyone's bullish right now, blah, 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 and then you react. That's the worst thing you can do. That usually leads to a lot of trades that turn into, you know, getting stopped out because you're reacting to random information. All right, let me move. That's a good question, Kim. Mustafa, do you think Bitcoin will form a double top at 67K and maybe 64K? So Mustafa, so I don't think, because I don't know. I don't. anything is possible. It's possible that we get a failed high or a lower high here because we are, see, this box represents the resistance area. So it's possible that we fail in here. But the thing is, I don't go into that with any type of absolute thought, or I don't have any kind of 100% confidence. Oh yeah, I think it's going to do this. I don't do that. I go in with a very open mind because I know the market's going to do what it wants to do, and I just have to be prepared to adjust. When it comes to markets, we cannot assert our ideas. We have to be a follower because the market tells us what to think, and that's the market. The market knows everything, right? The market always knows. The market is always right. We are just like, you want to think of it like with a dance analogy. You have a leader and you have a follower. We are the follower. That we have no choice because we can't assert ourselves. If we want to assert ourselves, you can try, but the market will take all your money. All right, so that you have to have a passive mindset, and that's hard for some people because some people are used to just being assertive and just making things happen. But you can't make things happen in the market, right? The market's just going to do what it does. It's like a force of nature. You can't force it to do things. So anyway, that's why I answer that way, because I don't think, I have no opinions. People ask me, do you think it's going to do this? Do you think it's going to do that? I have no opinion. I have no idea what it's going to do. The market will tell me what it wants to do, and when something is clear and I can measure risk and I see something that fits my rules for like a long, or if it's another market, a short, then I'm interested in taking a risk, right? Or risking some money to see if I could make more than I risk. And that's it. It's very simple. I trade rules. I don't trade the market. That's the way I like to think of it. So thanks for asking. Coffee lover. COT data also suggests long. Oh, that's interesting. So you're talking about the Commitment of Traders report, which is that's a very old sentiment report where they measure, for people that don't know what that is, they look at on a weekly basis, right? It's not in real time. They look at the smart money or the paper, the institutional paper versus the retail money, right? Which is typically the not informed money or the smaller trader. And they're saying, so the COT report is saying dollar long. I mean, see, I didn't even have to look at that report. The chart says it, right? So the chart knows. And the chart is real time. But thanks for mentioning that. I mean, I know a lot of people talked about that. And that's more of like a futures trader type of report. People look at that. Anyway, thanks for mentioning. Okay, cool. Now, someone asked, I think I skipped the question here. Hold on. I remember someone asking about, was someone asking about DOT? Or was it DOT? Okay, no, I'm just going back here. Okay, hold on. Just going through the chat. Let's see if I can get through everyone's questions. All right, what is the confirmation? Okay, I went over that. Okay, COT, Gotham. And thanks again for those 200 coins, or 500 coins from the Bay Area. Gmail, we're all sad and wringing our hands because our guru, big money on YouTube. Gmail, I don't even get donations on here. I get nothing from YouTube, nothing. I'm no, you're just joking. But you get these guys with their give me a donation thing, and I'm watching people donate like $50, $100. And man, I do this for an hour and a half for free. Anyway, but I'm not. It's not like I'm not abandoning YouTube. I just have a technical. I'm not TradingView. I'm not abandoning TradingView. It's just it gives me such a technical problem that it's just not worth it for me right now, because then it screws up my whole YouTube situation here. So I need to iron out this technical problem that I'm having with TradingView. And it's either my software provider either needs to fix the problem, or I need to get another piece of software or something so that I could I can simulcast. So that's why I'm just going to stick to the one that's easier, and that happens to be YouTube. Because what a mess. I was trying to do TradingView the week before, and what a mess. Anyway, thanks for mentioning. You always say focus on price action. Yes, right, and that's what I'm doing. But price action is a vague term. Maybe that's confusing. Maybe you think price action just means just look at these candles, right? But that's not. That's not price. Price action is more. What I mean by price action is context. So price action is not just the candles. Price action is levels. Price action is supports. It's anything that's not using a processed price. Okay, what I mean by processed is I don't have any oscillator on this chart. Okay, there's nothing that's giving me some sort of derived version of price. I'm looking at things that affect price, or I get like non-processed. Like for example, when price goes to a support, I don't need an oscillator to tell me that price is at a support. It's there. It's there in real time. I know there's a support. I know there's a chance that price is going to turn at that support, right? And no stupid oscillator is going to give me any kind of advantage to knowing that in advance. So using those variables, candles, levels, general structure, probability of the area, all that kind of stuff, that's all price action, because I'm not using anything besides price information. If I was using an oscillator, now that would be a derivative of price, if that makes sense. So that's what I mean by price action. All right, so I should probably be more clear on that. Thank you for asking. Zelta from Riga, yes. Facebook. Oh yeah, I heard that Facebook's going to change their name. I don't know if that's true, but that's what I've been hearing. So the market's closed now, and let's see, Facebook is up 4 points. Is this after hours? I don't know what the story is, but let's just look at the general chart. Maybe they have a report today. I don't know what the story is. But the general chart on Facebook has been strong. Clearly, higher lows, higher highs, all over the place, right? Recent price action, corrective movement, pullback. So correcting the broader move. In this price area right here, again, I don't know if this current price, the aftermarket price, I don't know if that's accurate, what that is, but you have a double bottom here, right, in this area, which is what? 319. So basically at 320 area, if it's coming off of that, this is, according to this, it says it's at 328 right now. But if that's the case, if that's true, and it came off this double bottom, though, that's definitely a sign of strength. If it takes out this previous high at 343, then it's changing the structure, right? It's changing the corrective movement. So you have to watch for that. If it takes it out, that doesn't mean you necessarily buy it. I mean, this thing is all over the place, especially with all the news that's been coming out and stuff like that. So if it takes out the high, the more conservative thing to do would be wait for the pullbacks, okay? Maybe it goes a couple of dollars higher, maybe 5, something like that. Wait for the pullbacks, and then it'd probably be a good long at that point. I mean, based on the general structure, it's not a short. I would not be shorting this thing. Right, until it starts really taking out supports. The first support it would have to take out would be 320, right? That would be the first support. And there's so many other supports. Look at this consolidation area over here. Look at this. This is going to act as a support. So I certainly wouldn't be shorting Facebook. There's plenty of, there are much better stocks to short than Facebook. I'm not saying you want to short it, but just throwing the idea out there. So I would be, looking for a long, either breakout, pull back, look for the long, or any test of that 320 low is a possible long opportunity, because that would be a range low on something like Facebook. I'm not a big fan. I don't like Facebook, but, can't argue with the structure there. All right. Anyway, so let's see. Mr. Plow, thanks for, okay, no problem. Do you mind having a look at Link? Yeah, sure. I was talking about Bitcoin when you stream on. Oh, okay, cool. Okay, I'm just jumping ahead on the chat here. Could you please check out okay, Adam. All right. So here's what I'm going to do, because let me just check the time. Let me see how I'm doing. Okay, so yeah, a few more minutes. I like to try to answer all the questions if I can, especially when I'm not on TradingView. All right, Link. So Chainlink. So yeah, I was actually looking at this before, because people usually ask about Chainlink. And again, just like those other coins, look where you are, right? Look at this. So it looks compelling. Yes, you're going to see lots of hype about it and all the hype fake guru videos and all that stuff. You have this nice little breakout situation occurring over here, but these lines represent resistance. So if you're not in it, you're buying in a high risk area, which, is not really my style. This whole area is high risk. Now, it's possible that it can break out and try to keep going, but if it breaks out, it's probably not going to go in a straight line. A lot of things don't go in straight lines, okay, unless they get stupid. Sometimes you see it, but you're more likely to get, pullbacks and stuff like that. So most important thing is this is a higher risk area. So you want to wait. If you want to get involved in this thing, it's probably a good idea to wait for a more attractive area, and that's this area right here, which is what, 25, the 25 area. something like that. I mean, right now this thing's fooling around at 32. So why take all that risk? If you want to be aggressive and you want to use this previous low of 29.5 and try to go for this buy signal, it's the same idea as Bitcoin at that point. Your chances of getting stopped out are pretty high, but if it breaks out and does something stupid, you can have a piece of it. So in that type of situation, it would probably be a better idea to go in with smaller size if you're interested in that. Otherwise, I would avoid this, okay? If you're in from a lower price and you're wondering what to do, great place to be taking profits. Definitely a great place, because this is when it looks its best. And you look at the chart and be like, oh yeah, that thing's going to break out. I mean, look at that. It's going vertical. But usually when things look their greatest is the worst time to get involved. It's usually when they look bad, okay? When they look bad and no one wants them. And, you know, the YouTube gurus aren't publishing their videos about how Link is going to make you the next millionaire and all that kind of stuff. When you're seeing that, that's usually the opportunity, okay? The higher probability and better quality opportunity. When they're doing this and they're obvious, you missed it, okay? So that's the way you have to look at that. So yeah, sure, you could play around with this if you want, if you're willing to take that aggressive type of trade. But like I said, I would compensate with smaller size. If you feel frustrated when, you know, let's say you take a smaller position and it does something spectacular and you're like, oh man, why did I listen to that guy? I should have just went all in. Well, that's greed, okay? And you say, well, what's wrong with greed? I'm here to make money. Sure, I understand, but that's not the problem. The problem is the risk, right? And the greed lures you into those high risk situations because risk is invisible. We can't see the risk on here. So we have to define it somehow. When the probability is against us and we go all in, you're going to be wrong sometimes, right? And the way things are situated, the way things are arranged against us, you're going to be wrong most of the time, a lot of the time. And high quality opportunities are going to be rare and infrequent. So it means chances are when you're taking these trades because something looks good, chances are it's going to be wrong, right? So you're going to lose. So why would you throw a lot of money at something where your chances are you're going to lose? They're more likely you're going to lose. That's the problem that people don't realize with this game. It's very similar to a casino. You know, you're playing a slot machine. Chances are you're going to lose, but people play anyway because there's a small chance you're going to win. And when you win, it's exciting, right? But no one makes money playing slot machines. So it's very, very similar to that. You have to realize that people intellectualize, oh, charts, fundamentals. Yeah, I'm an accountant, blah, blah, blah. Yeah, right. They intellectualize it and they make it seem like it's much more substantive than a slot machine, but it's a slot machine, to keep it simple. All right, let me see what else we got here. Elizabeth, okay, all right, got that. Jenny Jr., could you please look at, okay, Maker, MKR. Yeah, someone had asked about this. Maybe it was you. So here's the thing. This is expensive, right? $2,400. I don't know what they're thinking on this one. But there's a problem here. And the problem is, with all this optimism and all this spectacular stuff going on in these garbage coins and Bitcoin and whatever, where's the money here? Like, why is money not flowing into this? This is relative weakness, and this is a red flag. So if Bitcoin and the rest pull back, where's this thing going to go? This thing has a lower high established, okay? Look, it looks like a triple top, lower high. It's testing this low area again. Yeah, you have a bullish pin bar in there, okay? I could see why you might have some interest in that. And it is a minor support, but the broader structure around you is not very favorable. The context is not very favorable. This thing should be doing something. This thing should look like a chain link, right? This thing should look like one of those other stupid coins we were looking at, right? This thing should look like SHIB, but it doesn't. So that's a sign of relative weakness and something you have to keep in mind. If you want to take a chance on something like this, your risk can be defined by this low over here, 24, what is that, 2480? And this thing right now is at 24, no, I'm sorry, that's wrong. Why can't I read these numbers right? 2357. So about 100 points away, something like that. Yeah, about 100 points. You'd have to risk about 100 points, which means you need to make 100 points to justify it, which is possible if it tests this range high. But like I said, the structure is not in your favor. So you have to decide how you want to deal with something like that. If that support breaks, this thing is likely to test the lower support. In fact, if a Forex pair looked like this, or if the Nasdaq looked like this, I would be all about shorting it. I would be looking to I would be willing to take a chance on the short side because you have the lower high and all that stuff, and the support is likely to break, right? Lower high often leads to lower low. This thing tried to change its structure recently, but it's not following through. So that's something you have to keep in mind. Now, this could change. Maybe it establishes another higher low, and then maybe it breaks out, right? And maybe you take a trade on that and it starts to work and the structure changes. So maybe you have all that. But because Bitcoin is the leader and Ethereum, they're the leaders and they've done some nice things, this thing should be performing more like it was back here, not what it's doing now. So you have to keep that relationship in mind. That's the relative strength or relative weakness relationship. And that can give you an extra layer of context that you normally can't get, right? It's not intuitive. It's not something you could see. It's not one of these gimmick. People always ask me, oh, what do you think of the Bitcoin dominance index? What do you think of the Bitcoin long short? What do you think of the on-chain blah, 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 right? That's all obvious gimmick nonsense. Where something like relative strength or relative weakness is not something that's obvious. You can't see it anywhere. You have to look at the relationship between the two on a chart. I mean, I guess we could put we can overlay a Bitcoin chart on here, but you don't even have to do that. All right, just Bitcoin new high, this thing, no new high. That's a problem. All right, so anyway, thanks for asking. Good question. Yeah, it looks meh. I like that, meh. It certainly is. Meh is a good way to describe this. Meh. All right, hey Travel, just out of curiosity, can you comment and tell us something on the smaller time frame chart? Well, what do you want to see? I would be curious to have some insight on it. Okay. All right. So Bitcoin. I'll do that and then I'm going to wrap this up. So Travel wants to see Bitcoin from more of a day trading perspective. Okay. I've fooled around with Bitcoin as far as like day trade goes. I've done a lot of paper, trade on paper with it and stuff like that because I'm just curious to see like the movements, right? And there's no reason to throw real money at it if I'm not comfortable with the movements, but I like to fool around. So let's take a look. You want to see like a 60-minute, right? We'll take like a 60-minute here. So from more of a day trade perspective, all I'm looking for here are the same type of things, right? Structures, price, candles, things like that. Now, 60-minute is even kind of a large time frame to work with. You're probably better off looking at like a 15-minute. So now let's look at the structure here on Bitcoin, 15-minute Bitcoin. And now here's the thing you have to keep in mind with the day trade mindset. Your risk reward is not going to be the same as something like a swing trade. Again, people don't get this. So if you think you're going to take a day trade and that day trade is going to be worth 3,000 points because that's the way it moves, well, you're asking for trouble because on a 15-minute time frame, that it's going to have a different magnitude. So if you could make a couple of 100 points on a 15-minute time frame, that's within reason. At the same time, your risk is not going to be 4,000 points on a 15-minute time frame. Your risk is going to be something like maybe 100 points, 150 points, right? And that's going to come from the market structure. But I know that from just the stuff that I've done with this. So let's just take a look. What do we have here? So recent daily structure, higher lows, higher highs. Lower high over here. We have a bullish pin bar that closed about 30 minutes ago. And if that high is taken out, you have yourself a buy signal. But what's the risk? Right? So 62,425 is the low. That's where it should not go. But it needs to take out, what is that? 62. So basically, what is that? 62,714. So basically 62, you round that to maybe 750. If it takes that out, you have yourself a buy signal on the day trade time frame. Where should that go if it's going to go your way? Well, you have a resistance here. You have this resistance area right here. So those are potential areas where you could maybe take a profit if it can go up there, right? Now, again, it really helps to wait. You have an inside bar in the recent candle. Maybe if you want to take an earlier signal, you wait until that high is taken out. What people do with day trades is they get in now. They say, oh, it's good enough. It's a low. I'm buying it. But there's no reason to buy this thing right now. This current candle can close red. It can take out this pin bar low. All right, so when it comes to day trades, that's all I'm looking at. No oscillators, no other nonsense, just basically candles and structure. It's really the same as what I'm looking at for swing trades. Except for swing trades, I have to look at larger context levels and larger context support and resistance and structures, because they're going to affect my judgment. When it comes to a day trade, all those other levels, right? Like I'm not going to be worried about 57K if I'm looking at if I'm looking at a 15-minute chart. Does that make sense? Okay, so I'm going to leave you with that. Thanks for asking, Travel, because it's a good insight. Show some people something a little different. If you're new to this, I would not recommend to day trade. It's the hardest way to make money, and all you're going to do is lose. Okay, no problem. Mr. Banian, would you have your take on some good stocks, dividends? When would you recommend buying them? All right, dividend stocks. All right, I'm going to answer that question because I don't have to really use a chart for that, and I got to wrap this up. So here's the thing. You want high quality stocks, okay? Stocks like Walmart, stocks like, a lot of these energy stocks pay decent dividends, like Marathon Petroleum, ExxonMobil, Valero, right? But when to buy them, though, is a different story. Now, when it comes to that kind of thing, you want to think more of like from an investing perspective. Now, let me just point something out here. Oil. Look at oil. Oh, bearish pin bar on oil. So here's the reason why I mentioned this. So if you're looking at energy stocks, because they pay a decent dividend, right? Is now the time to buy them? Not really. Oil's at a high, and oil can pull back. So why are you going to take all that pain, even though you're getting paid dividends? So you're better off waiting for some sort of market low or some sort of pullback, right? Just like anything else. But that pullback can take a month or two to develop. So when is a good time to start picking up those stocks? During the pullback. I mean, if you look back in August, I mean, look how it pulled back over the whole month. Something like that would be a time to start buying them, and then get paid to hold on as you take more pain. Now, here's the thing to keep in mind. When you're thinking of inventory, like you would be for this type of situation, instead of using a chart, you can just use time and size to control your risk. So instead of saying, oh, look, we're at a high, I should avoid, you can do that. You could say, oh, look, bearish pin bar on oil, why am I going to buy stocks now? Bad idea. But instead of that, you can also say, hey, listen, 15th of the month, I'm going to buy ExxonMobil, and I'm going to buy Valero, and I'm going to buy Marathon Petroleum, or maybe you just buy one of them. And you can say, okay, I have $1,000, or I have $5,000. I'm going to split that up into 10 $500 investments, and on the 15th of the month, I'm going to buy my shares, okay, no matter what the price is. And that's how you build inventory at any price. But if you want to refine that further, instead of just using time and size, you also can look at the chart and say, well, on the 15th of the month, where are we on the 15th of the month? Are we at a high? Are we pushing highs? I could probably get a better price. So maybe I will not buy this month. Maybe I'll buy it next month, right? You could try doing that, but if there's a ridiculous move, like oil, right? Ridiculous move here, you miss some, you miss that. Okay, so it's up to you on how you want to deal with it. That's why if you cut charts out of the equation when it comes to inventory, and you just buy no matter what the price, you're just controlling your risk with a smaller size, like you've spread out your purchases and you're going to buy once a month, you're going to get an average price. You're going to buy some at the high, you're going to buy some at the middle, you're going to buy some at the lows, right? Once you fill up your allocation of what your objective is, and then you collect your dividends. That's the way to do something like that. But like I said, like right now, if I had an allocation and I was going to buy some energy stocks and I saw this, I couldn't buy that. I would just wait. Like, you know what? I'll just skip this month, or I'll cut my allocation size. Right? Instead of $500, I'm only going to buy $250. Why put on more near a level that's not really beneficial to me? Why not wait until they go on sale and I'll have a little more money, because I'm only going to put half of it in on this purchase, and I'll wait till the next purchase, or maybe I'll wait for the first of the month and make my other little half purchase, right? So there are creative ways that you can do that. But again, the key is sizing to control your risk rather than sitting there trying to work with levels and everything else like we do with swing trades in smaller time frames. Does that make sense? All right, so I'm going to leave you with that because I got to wrap this up. I like to talk a lot, so and I'm talking too much today. So anyway, yeah. So if you get a chance, if you'd like to see more about what we do, you could check the links in the description portion of the analysis here. You can see what we do at Greenbridge and stuff. We send out signals, and we have a 7-day free trial and all that. Things are starting to get a little bit more busy. So, like a bunch of signals were sent out this morning and stuff. So now is probably a little bit of a better time to try that free trial. For a while there, things were very slow, and I don't like to encourage people to do a free trial if there's not a lot to do, because then people, where are the signals? Because we don't force trades, right? We like to take signals that, even if they're aggressive, they still need to make sense. A lot of these fake gurus, they just throw anything out there because they know it's random. And they know that people like action, right? And they just give you what you want. It doesn't matter if you make money or not. That's not their goal. Their goal is to make money for themselves. They don't care what happens to you because they know that you're going to quit anyway, and they're just going to replace you with someone else. That's the way it works in this business. All right, everyone. So I want to thank you all. I hope you all got something out of today's stream. I really try hard to make these educational so that you come away with some sort of context for the next few days, what's within reason, what's not, and all that kind of stuff. And hopefully I can steer you away from the conventional wisdom and the intuitive nature that we apply to markets, because it's ineffective, right? And hopefully I can guide you more toward being objective and using market information, valuable market information, to help you come to a more objective decision, whether it works out or not, right? Because this is a game of risk. It's not about making money, it's about risk. And once you have your risk under control, the byproduct of that is you come out making money because you make more than what you risk. And that's the whole point. Anyway, all right, everyone, cool. So I'm glad you all like it. Thank you. So join me. I should be back next Thursday. Is when Mondays and Thursdays when I try to stream. So join me Thursday and ask me some more questions, and we'll continue. Okay, so thank you all. Wherever you are in the world, whatever time it is, in the evening, afternoon, enjoy the rest of your day, wherever you are, and thank you very much for watching.